Hello, I'm Alan Barry Labucan, the Chief Market Commentator for Agoracom, and I have a great show for you today. This is a very special event for me. The first person who ever got me on TV was Pat Bolland. That was a lot of years ago, and today we get to turn the table a bit. He's going to be Pat Bolland, who's famous throughout Canada as a broadcaster, an icon in the business world, I think. I'm sure Pat will kind of downplay that, but to me, Pat is definitely an icon in business television up here in Canada, and I'm very excited to say welcome to Pat Bolland on my show.
And I am very excited to be here. As you say, the roles have been reversed, but it's certainly going to be a lot of fun.
You bet, Pat. So let's get right into it. Why don't we start with something you wanted to get into, Pat?
You know, the thing that worries me around the world, if you will, it isn't things that are happening in Greece, although it's important. What's happening in Ukraine, that's important as well. The geopolitics of the Middle East, I mean, those kinds of things are always going to be around. What I really worry about financially is the amount of debt that's accumulated globally, in the United States to start with, but globally now, on a man-by-man basis, and on a country-by-country basis. And you know, there's a gal that I've interviewed a couple of times, Pippa Malmgren is her name. She used to be an advisor for the Clinton administration, if you can imagine. And the Clinton administration was not bad economically, oddly enough. The rest of it, I'd throw it out the window. But that said, you know, she says, look at these debt situations. How do they unwind? How do you get out of heavy debt? Well, you can default on it. You can devalue your currency. You could potentially have some inflationary pressures to get out of this thing. You could grow the economy. That's a lucky one overall. So there are various ways to get out of this, but all of them have their massive problems.
Absolutely, Pat. And you know, sometimes I wonder if I'm looking at the same market as you know, and what's going on with the economy, as people like, you know, Fed Chairman Janet Yellen, who just had their Humphrey Hawkins yesterday presentation. And you know, for example, you mentioned about the debt and currency. Look at the United States dollar. It's getting they're jumping on that like it's going out of style, Pat. And yet there's $18 trillion worth of debt. 18 trillion, and that today is considered safe haven.
Yeah, when you look at the Obama administration, and before, to be fair, the amount of money that the Americans are spending, the deficits that they're running up for military campaigns and other things, never mind quantitative easing, and it's not affordable over a longer period of time. But your point on the debt is an interesting one, in that at some point you've got to pay the piper, and interest rates in the United States are really, really low, and still money is flowing into the U.S. economy and into the U.S. dollar. Why is that? Well, first off, it's the safe haven currency around the world, and I think that that's an important component of what we've seen in the world. Do I want to be in the euro? No, thank you very much. Do I want to be in the Russian market? No, thank you. The renminbi is locked to the U.S. dollar for all intents and purposes, so it's the safe haven currency, number one. Number two, it's the only economy right now that's growing at a decent pace. Okay, China's a good pace, but not as good as it used to be.
You know, Pat, that's another one that I kind of have some difficulty with what I'm hearing from Fed Chairman Yellen. It's like, you know, you can have that headline number all you want. You can pay attention to that, but I don't pay attention to that headline number. I look at real unemployment. I look at how many people have left the job market, how many people are underemployed, and the real unemployment, Pat, has only moved a couple of percentage points down after all of that stimulus. And yet, they're talking like they can end stimulus. I don't think that we're going to see, if they do some kind of quarter point, half point kind of move, I think that is the most we can see, Pat, because my basic thesis is, how can you let the interest rates go up when there's $18 trillion worth of debt?
Yeah, they can't afford it. Your point is very well made. I'll throw into that equation something that I found very interesting. When you talk about jobs and job growth, okay, the amount of student debt, even in the last 6 years, has gone up astronomically high. So you've got a young kid fresh out of school, can't get a job, can't pay down its debt, goes to live with their parents at home, kind of a thing. They're not getting the job opportunities and certainly not getting the kind of salaries that they expected when they went into the job market. So you're not going to see job growth amongst those young people, and that's the future of the American economy down the road. Sure, you talk about the 1%, the guys who own the companies are doing fine, thank you very much. Government employees, doing fine, thank you very much. It's all these people that are coming fresh out of school with massive debts that are held in check for the time being. A massive problem for job growth in the future.
Well, absolutely, and all they're going to be end up spending, Pat, they won't have any money to spend in the economy. They'll be spending all their money to pay down their debt for a job, for jobs that they can't get.
And you're
You
seeing
know, it's,
that already, and you're seeing that in areas like consumer retail. The retail numbers have been, they were good for a little while. Christmas season kind of played into that a little bit, but look at how they faltered over the last month or two. Same with home sales and new home sales. At this point in an economic recovery, they should be a lot more robust. And what that says is that the bottom end, the kid that's just getting out of school is, I don't know, renting or something along those lines, not buying. And if he's not buying, then people are going to build new homes. And that's a key component of the American economy.
well, and Pat, there's still a lot of overhang in the market from the 2008 economic collapse. So when can they start? I do some consulting for a company that is in the REIT business, and down in the States around Chicago, and there is some movement on the commercial real estate, which is there's some improvement happening there. But again, Pat, I go back to all this stimulus that was put in, and this is all we're getting. And now it's like the Fed chairman's talking about full employment. We couldn't be further from full employment. That pushes pressure onto the inflation through wage pressure. We couldn't be further from that, Pat.
Well, be careful what you wish for there, because suppose we get robust job growth and then we start to get wage inflation. I mean, inflation is, according to Yelp, even just yesterday, too low. Job growth is too low, in her words as well. But if you do get robust job growth, then you do have the risk of inflation. And then inflation is something that's really difficult to keep.
I think inflation is so far in the future. Until I think it's 2/3 of inflation comes from wage pressure, and with the current market in U.S. market, I think you could look out 5 to 10 years and not have to worry about wage pressure.
Okay.
It's hard for me to say.
Totally agree with you, because look where you're looking at wage deflation. You're seeing wages coming down in Europe, for instance, while you're getting wage inflation happening in China, but they were from really depressed levels.
Yeah.
And relative to what you're getting in North America for wages, I mean, they can still continue to grow considerably. But you are getting wage deflation in some critical economies around the world. Your point is well made on inflation, not being on a long way down the road. But here's the problem with that. Remember what we started with. We look at these high levels of debt at all levels, individuals through to governments. Okay, if you're not getting inflation, how are you going to pay off that debt? Are you going to devalue the currency like the Japanese have done? Are you going to walk away, default like the Argentinians have done? Funny enough, when the Argentinians defaulted, their economy actually improved. Are you going to look at, well, we've talked about deflation, no inflation. I mean, the only way you can pay off that debt is to grow the economy and tax more. And nobody is seeing any of that.
Yeah, the thing that I'm fearful of, Pat, is that that the growing gap between the rich and the poor. I think we have a systemic problem there that is going to be very challenging to fix. Someone who's sitting on $1 billion, they're not going to pump that money into the economy very quickly. You give a bunch of people like the kid coming out of school, a bunch of those kids $1 billion, and it's going to get spent. And I just that's the one thing that I have a difficulty trying to wrap my head around these days is how is this economy, how is the world economy going to start growing as we keep the money keeps flowing into the rich, like you said, the wealthy, and where are the people that drive the economy going to be getting their money from?
I don't disagree with you at all, but I'll make this observation because I'm flustered by the same kinds of things. And this whole Occupy movement that was around a year ago, I get their point, actually. I see the differences between the rich and the poor, but that's probably unique to the North American and Western cultures. I don't think
Actually,
it's
Pat, I think it's on a global scene too. I think we're seeing globally
but
that
look
the
at what we're looking at in emerging markets is we are seeing that the average Joe in China that was getting paid 0.00 what the Americans were are now, because of wage inflation, catching up to North Americans, but also not leveling, but at least making it less of a wage gap between the bureaucracy in China and the working man. And capitalism is kicking in China very quickly. So I think that while the North American and Western experience is a bad one, I totally agree. I think it's considerably improving in China, for instance.
sure, yeah, and I'm hopeful. I think that there's a point where I'm not much for wanting to have the government interfering too much, but I think that there's a way to create some incentives to have some of that money come off the sidelines.
Yeah, well, and your point is well made because when I was a kid growing up, and you might remember some of this, there were incentives for things like research and development, and that was for the movie industry in this country, and it worked. You could do the same thing for the mining industry in this country. We've already seen the incentives play out in the oil and gas sector in this country, in Canada, but maybe more incentive for mining would help.
Well, Quebec is a sort of example to the world. I think, they are exceptional when it comes to supporting the mining industry, and it has really helped them with jobs. We need to, Pat. I think the one thing that will get me excited is that I think that what will happen in the next coming years is that we're going to start to see a bit of a shift with oil prices. Although oil prices are really low today, I think that this is just setting the stage for the next 150 dollar barrel oil. And when that happens, I think there's a potential that we'll start to have to go back to what made America America. Building things in America. They need to rebuild that domestic economy in the United States, which is kind of shocking for me to say at this stage in the game.
I I'll take issue with a couple of things there. First off, oil, and I think that oil. I lived when oil was at $10. I lived when it was over $100. So I remember both ends of the spectrum, and I think that oil right now is at a reasonable range. Does that mean it could go lower? Absolutely. What is it, $10, $15 lower? I don't see $10 or $20 oil, and a couple of people have come out recently and said that it could get to that. But I also don't see $150 oil happening at any point soon, and
Well,
that's
let
because
me, after
technology.
you finish, Pat, let me explain to you why I think that could happen.
Okay. And that's because of technology. Look how much oil they found just in the United States when they improved the fracking technology so that they could get at more of it. And the United States has become effectively self-sufficient as far as energy is concerned. Not quite at that level right now. And then we've got 185 years worth of supply in Canada in the oil sands, and we can produce, they say you need $50 or $60 oil, not a chance. They can get it out of the ground for 2025. You and I both know that, and they're making substantial profits. And there's all kinds of oil still in the Middle East that's still to come. Then if the fracking technology is expanded into Russia, China, Europe, then those areas will become energy self-sufficient as well. I don't see $150 oil, but I'd love to hear what you have to say about that.
Well, Pat, it all comes down to the average cost of producing oil throughout the world. And I don't believe that in the oil sands now the costs have gone up dramatically, Pat. Remember when they had $10 a barrel oil? A tire then wasn't costing you a quarter of $1 million. One tire, okay? The cost has gone up dramatically. And so, the average cost globally is about $80 a barrel. My thesis is that the longer it stays under $80 a barrel, it's setting the stage for the next big rally. Okay? Now, Does that rally take it all the way to 150? Does it take it back to 100? I'm not sure. What I'm looking at is the next rally to start. And when it comes to oil, how to, this kind of all fits in because we were talking about the situation, all the sort of bad things that are happening in the economy. But there's always, to me, Pat, a way to play the market no matter what's happening. And, that's always to me to be a contrarian. And I like to look when I've got some serious reasons to be a contrarian. And that under $80 a barrel oil is my main reason.
I'll beg to differ, only because last time it went through 80 and went through $100, oil rigs come out of the woodwork. They were all over the place, and I think the Saudis are right. Not right, but I mean they wanted to gain back market share, and they've done that effectively by lowering the price. And I suspect that they'll stay here for the next 4 or 5 years. So we beg to differ on that one. But you talk about opportunities, and you paint a worst-case scenario for things like a debt on a global basis, and we talked about the strength of the U.S. dollar, those kinds of things. You know where the opportunity is? It's in gold, for instance. And you and I have talked about this in the past, and I'm not a gold bug. It just makes common sense to me.
And everybody thinks that I'm a gold bug, Pat. I'm not. I'm a guy who looks for value wherever I can find it. And it just so happens that right now, the gold stocks have been beaten down relentlessly. And whenever it gets beaten down relentlessly, I like to start looking at it. When you were on BNN, Pat, we had a great run there for a few years where I was coming on regularly, coming up with stock picks, and they were doing very well. We talked a lot about Gold Eagle mining well before it was taken over for over $1 billion. I think what we're coming into is a very close scenario to that, Pat. Think we've got the market so beaten down that we've got some catching up to do for the next few years. And there's a couple picks out there that I'm really bullish on right now, Pat. One of them is Rubicon Minerals. Rubicon Minerals, funny enough that Gold Eagle just came out of my head, but Gold Eagle, what happened there was they made a new discovery in Red Lake, Ontario, and Goldcorp ended up buying them out. This time around, Rubicon has made an exceptional discovery in Red Lake, Ontario, and they're going to turn it into a mine, and it's almost finished built. They're going to start producing this summer, Pat. It will be the first gold mine in Red Lake, Ontario since Goldcorp built theirs.
But and it's a great story, and I've heard that story from you before, and I totally agree with it. But remember when those small cap gold companies, gold was at $400. It was below $400, and it took a price movement in gold before people went, whoa, wait a second, there's some real value in the small caps. And then people looked at production costs and so on and so forth. That's why they're selling off the small caps right now. They say that all these small companies can operate in this environment for the very reasons you talked about for oil. The $250,000 tire, makes it too expensive to build a mine. Well, guess what? They can still get it out of the ground at a reasonable price. It just takes the investors looking at these opportunities, like Rubicon, and saying, hey, listen, let's say $1,200 is a base for the time being, same way $400 was a decade ago. Let's say $1,200 is the base. If it pops to, pick a number, $1,800. I'm not $2,000, but $1,800 sounds reasonable to me in the next 2 years. Then all of a sudden, there will be people climbing over themselves to get at these Rubicons.
Yeah, but Pat, I don't think you need to really wait for that because there's some phenomenal opportunities right now. Look at Rubicon. When gold got down to 1,160, 70, Rubicon was trading at 85 cents. Now they're trading at $1.40, and that's a very short period of time, Pat. That's what I'm getting at. They're so compressed the spring that it doesn't take a lot for a little pop, and a little pop is almost a double.
Well, yeah, and that's my whole point. The psychology has to change in the gold marketplace for those stocks to get that pop. because right now it is getting compressed exactly as you described. But as soon as the psychology changed and whoever's selling it, or the compression that you're seeing, or maybe the absence of buyers, as soon as that changes, it'll move quick.
Yes, and I think that you brought up something else that I is kind of something that I think will structurally will happen, Pat,
Yeah.
which is that there's a lot of junk companies out there. Okay, there's 500 to 1,000 companies that are publicly listed right now that I just as soon see them gone. They have no money, they have no projects, they're zombies. Okay. The one problem that the mining business has had for a long time, Pat, is allocation of capital. When that hype machine comes in, the money gets spread all over the place to everyone who has a claim, moose pasture somewhere, and then the focused exploration to find those discoveries, the key companies that actually have a realistic potential of doing that,
Yeah.
they don't get the money that they need. So I'm hopeful that a lot of these companies get washed out, and that will help the cream rise to the top. So yeah, I mean, I see a lot of good things happening right now for gold. I'm seeing, Pat, what I'm seeing is I love, after a market's been beaten down, I
Yeah.
really watch how it starts to improve. I'm looking for that higher highs, higher lows. And since gold got down to that 1160 number, it's been making higher highs and higher lows. And it's that kind of a strategy that I think pays off for you, Pat. Don't be buying into the rallies, buy into the dips. And I think that those kind of trends with the higher highs and the higher lows tend to be very long trends. And that's the play, I think, right now for gold.
Yeah, I totally agree with you on that. And I think we are in one of those minor retracements right now because we took that little run up to the $1,300 level, and it kind of faltered at that and
But
came.
I'm glad it didn't fall. It didn't fall right back to the last low.
Yeah, the other one that I'm watching, I don't know whether you follow this, but for the same exact reason as it seems to be turning right now, is uranium. And we've had, talk about washing out. There's hardly any uranium companies left anymore to follow or not. So I think that the concentration has happened in that space that hasn't happened in gold and some of the other mining companies, and that might be another opportunity.
Well, if you're in the uranium space, it just happens to be one I follow very closely as well, Pat. And one of the best discoveries out there right now, and is just dramatically undervalued. I've got to get you the name here, Pat. I follow it closely. It's Fission. They've got a great discovery, Fission Uranium. FCU is their symbol. They're trading right now for $1.14 on the Toronto Exchange, and they've got one of the best uranium discoveries I've seen in my career, Pat. The last one like this got bought out for about $475 million before we had after the Fukushima. So there was a market out there, and what makes this so special, Pat, is most of the discoveries in Saskatchewan are very deep and expensive to get to. The Hathor discovery and the Fission's discovery are very close to the surface, and yet they're getting that extreme high grade that's deeper, really close to the surface. So from a mining perspective, Pat, it's a slam dunk. If you think that uranium prices are going to increase, Fission Uranium is your play.
Yeah, funny you talk about uranium near the surface. My dad was a prospector when he was in university. He put himself through school for nickel, I think, in those days, up in the Yukon. And he used to land the bush planes on flat areas that were like pavement, asphalt. It was black pit uranium right there on the ground. They didn't, of course, know what it was.
Yeah, that's actually, Pat, that's how a lot of discoveries have been made.
Yeah.
And maybe on that note, Pat, we should wrap things up because we've been at it for a while here. I told you this thing goes real fast.
It was great to chat to you, no question.
Yeah, Pat, I've always enjoyed chatting with you. We've always had a very good rapport. We have to do this more often. And I just want to say thanks for coming on today, Pat.
My pleasure, and thank you. I had a lot of fun.
Excellent. Well, we'll do it again. thanks a lot for joining us today. As again, I'm Alan Barry Labucan. I'm the chief market commentator for Agoracom. We had a wonderful guest in Pat Bolland. We're going to bring more of these kind of shows to you in the future. You all have a great day, and we will talk to you soon.